Good afternoon, everybody. This is Stan and Jack for theartofchart.net, and today we're doing a webinar on triangles, trading triangles. And triangles are a very common setup that you see across the market in commodities and indexes, in currencies. And what we want to do today is kind of demystify them a little bit, help you see them, number one. Number two, help identify the different types of triangles that exist. And I think Jack's going to show you some classical triangles. I'll show you some Elliott wave triangles, and we'll talk about how they break out, and we'll talk about how to trade them. And I think that's the idea. Our disclaimer, as with everything else that we do on theartofchart.net, we do webinars and we do technical analysis for educational purposes only. None of the material that we present here on this website or anything that we do in webinars is intended to be, a trading recommendation of any kind. So just wanted to cover that off because that's typically how we introduce all of our content. And Jack, anything you want to say just for a moment while I get my chart ready about triangles? Because I think fundamentally, wouldn't you agree that triangles are fundamentally about indecision?
They are, and compression.
Yep.
They are going to show you a lot of interesting stuff tonight. I'm also going to show you, we're also going to talk about RSI triangles and what they can say about patterns which are forming while those RSI triangles are forming. But I think triangles are probably the most treacherous pattern, and yet in some ways the most reliable patterns we work with, because the triangles on breakouts I find extremely difficult, but after the breakout, when you've got an identifiable thrust out of it, it will almost always come back. So you've got a very reliable trade. If you can actually identify the thrust and identify when that thrust is breaking down, then you've got a very reliable trade going back.
Yes, I absolutely agree with that.
Which is my favorite part of trading a triangle, and it's what makes triangles so great.
Yep, absolutely. So I'll tell you what I'd like to do is I'd like to start with triangle examples that are seen in indexes. And I'm just going to go, Jack, if you're okay, I'm just going to go to the S&P and show examples of compression and show what happens after you get compression, because I think compression in a triangle is the first thing you need to spot. And the tool, the obvious tool, of course, is RSI. And Jack and I use RSI in a very similar fashion, and for some reason my system is not responding. Okay. Well, I'll tell you what, there's a small example of a triangle right here, okay, and I'll talk through the E-mini. This is going to probably switch, but you can see right here, and I don't have RSI on this particular chart, but you can see right here what happened in this triangle. We actually compressed. You can see how price slows down, okay, and you can see this is an A, B, C, D. There's your E wave of a triangle. And then you get a thrust out of the triangle, and that triangle right there happened in 3 waves, okay? And so for an Elliott wave triangle, typically what you have is you have triangle support, which is the bottom line, and you have triangle resistance, and you have this type of compression that happens in price, but also on RSI you have compression, okay, which I'm having a system problem here, Jack, so I'm just going to introduce the basic notion of a triangle. Now, this is not such a great example of a triangle in terms of the back test, and the US dollar is a far better example of that, which I'm going to show you the US dollar one in a minute. Here is the S&P, and there's also another example here on the S&P, which I will do the daily level S&P one first. And by the way, triangles, here's another triangle right here, and let me just expand this chart and we'll talk about it. Triangles are typically a sign of indecision. You can see it right here. So here we have the B wave, which we were calling on right at 2120, okay, and we have the W wave, and then we had this sideways pattern, and it took a long time. Look how long this took, okay? This is like a 15-day triangle, and price slows down, okay, and that's one of the indicators that you're in a triangle. So you have an A, you have a B, a C, D, E, and then you get the thrust, and then you get the back test back into the triangle. Now, the thing about triangles, and this is the other thing, and you can see the compression here, okay? And the compression actually then leads to a larger thrust, okay? Compression is usually seen on RSI in this fashion. You can see how RSI is compressing. And let me show you another example here, which is even more, more important. Triangles do not just occur in a typical wave 4 example. Okay, now basically there are two triangles here back to back in the S&Ps. Okay, here is the high in the S&Ps back in May of 2015. Okay, here's your W, and then you have an A, B, C, D, E, and that is indecision. That is indecision. Okay, you can see the triangle right here. Do you see the compression on RSI? Okay, when you get this compression is a sign that we're about to get a move. Okay, and you get the thrust and you break below triangle support. Okay, and typically on a triangle what I do is this, is I draw it out. Okay, and then you get the back test. Okay, now very often the back test comes all the way back to the bottom of the triangle. This one did not quite get that far. Okay, I would say the W here is the back test. Commodities back test better than indexes. Okay, so on gold, on the US dollar, I'll show you a breakout of a triangle. It retested all the way back, and it's a very reliable trade. Okay, so you get a thrust out of a triangle, you're going to get a back test that goes either almost to the bottom of the triangle or very close to the bottom of the triangle. So it's a 70 to 80% probability, this back test. It's very reliable. And so here's a small example of a triangle. Now this is just a triangle of indecision before we get this third wave move, okay? But there are other types of triangles that you need to look for in the marketplace. And let me show you another one. Now this one is one that I've talked about many times, and this is what I call an ending diagonal, okay? This is an ascending triangle. This is what we saw before the high. Now an ending diagonal is a very important structure because when you see it, it's signaling a major market event. Okay, so here is an ending diagonal. It's a triangle, an ascending triangle. By the way, from a classical analysis perspective, Jack would call this a rising wedge, okay? And you can see it here on RSI. You see the compression. Look at the compression. And whenever you get compression in a market, what begets compression is expansion, okay? And so price slows down, and it slows down, and the volatility in the market gets narrower and narrower, and then you get, well, in this particular case, we got another indecision pattern, and then we got the thrust out of a triangle, okay? And so this was the beginning of a correction, okay? So the thing about triangles that I'm trying to get across to you guys is, first of all, how to see them on RSI and the different ways in which they become manifest. Sometimes they're over long time periods at the end of a move. And for example, right now in oil, we're putting in a contracting ending diagonal, just like this, but instead of the ascending variety, we're putting in the descending variety right now. So that structure that is incomplete at this point, we're sort of in the D, we finished the D part of the triangle in oil. We're putting in the E part of the triangle now, okay, in oil. So oil is in this part of the triangle, okay, and I'll get to oil in a few minutes. I'm going to throw this back to Jack so we can show you some examples of classical triangles. But I think being able to see RSI, okay, see the compression on RSI, being able to count the triangle. Now, sometimes the counting doesn't work. Okay, if it's a classical triangle, you have to wait for a breakout of the triangle, okay? But typically, if you get the feel for how to do this, it's pretty simple because it's typically an A, B, C, D, E type setup, and the E wave is always the shortest, okay? So if you see this kind of setup where you have compression and you see the short wave here that doesn't penetrate the C wave, that's your E wave, and then you can almost be guaranteed you're going to get a thrust. Okay, so those are basics, Jack. I wanted to show the S&Ps because I think a lot of people are familiar with the S&Ps. Let me throw it back to you and have you show a couple of examples. And what I'd like to do is get an example here and maybe demonstrate how to trade a triangle. I'll set that up while you're doing your examples. Okay?
Right. Okay, triangles are very common patterns. Some of them are so big they're hard to see. This is one of them. This is EEM, and this is the Charts Institute, well, this is the 10-year chart. This is a triangle which comes off the 2008 high, and basically encompasses practically all of the action since then until it broke down a few months ago. Now, you can see compression on the RSI. It's from here. I didn't count the 2009 low. Basically, that went down, and the triangle really started forming here. It's you've got A, B, C, D, E part wave. That's not uncommon at all, and then down. It's we're now on a thrust out of a triangle. That thrust has taken the form of a falling wedge. I would ask you to note right here how much room there is down to the bottom of that falling wedge. We're looking for an inflection point on SPX at 1750. Don't assume it's going to hold. It may well not hold. Quite a lot of things are saying it won't hold. So that, well, I've got an inflection point. We'll see what happens there. Is this a reasonable match with the SPX target at 1600? Yeah, I think it probably is. Although obviously EM had a very impressive head start. Let's have a look at a few other ones. And this one is a very good example, by the way, of one that is so large that it's rather difficult to see. You do see quite a lot of very large triangles. I've got other ones here. Let's have a look at the one on oil. Now, I posted this one. Doesn't look too big here, but then this is a 20-year chart. This is the triangle. This was a classical triangle, and one thing you'll notice immediately, well, you'll notice immediately when I shrink the chart a bit so you can see it on the same page, is the matching RSI triangle. Now, but the match isn't exact. Now, I posted this in when this broke, late 2013? Yeah, late 2013. And I posted it with a comment that the triangle was suggesting that we would either go to retest the 2008 high in the 150 area, or that we would go down to the 45 area. I have to say both options seemed fairly ludicrous at the time. CL was, I mean, we'd just broken over here, so we were up at about 110, 112 or something. But actually, we broke up, had another false break up, and then it resolved down and made that target. Look at the RSI. What was the RSI telling us? The RSI was telling us that these false breaks were still within the RSI triangle.
Yeah, absolutely. Yeah, absolutely. Key indicator there. Key indicator.
So actually, the RSI triangle only ever broke down. It was only the real price triangle that had false breaks up. Again, something to use. These are very good patterns, and these are very reliable patterns. And this one had no false breaks up on the RSI, and it went down. Often, you will find the RSI triangle is better than the price equivalent. Not uncommon at all, and something you can use. Now, this obviously went down. And astoundingly, we went through 45, and we just kept on going, didn't we? So we hit 26 dead pretty much today, didn't we? And may well be going lower. This is when Sam was talking about the ending diagonal in oil. That's this one here. You can see it rather more easily on this chart. It is this ending diagonal, and we underthrew it slightly at the low today, and stopped ticks short of my long entry, which was very annoying. But, that was the OPEC announcement. I think it probably would have reached it otherwise. So, but hey, it happens. All right, great. Let's show you, hang on, I've got another one. Now, this isn't an Elliott wave triangle, because Sam had a look at this, and it's not. And you don't really see the RSI compression on it, but this is a pure classical triangle.
Yeah, it is.
The one on the euro. And it's a very nice triangle, although you can also, I've put in the arrows for it, you can also read it as a complex head and shoulder pattern.
And if I could just do a differentiation here, Jack, for folks. The thing about this triangle, for example, if it doesn't have the RSI compression, it is unlikely going to be an Elliott triangle. And these are the triangles where you don't have the compression in RSI, where you have to really wait for the breakout. And if you're trying to trade a triangle and you have compression on RSI, well, there are hints that you can use to to get an edge, if you will, over which way the triangle is going to break out. I'm going to show you that in the dollar here in a few moments. But I think in the classical version here, Jack, would you not agree that you really need to have a sense of which way it's going to break out? And I think very often you have to wait for the break in order to be clear about which way it's going to go.
Yes, and actually more than that. But the triangles obviously are notorious for multiple breaks, false breaks. In fact, Bilkowski actually says on his website for the symmetrical triangle that his preferred type of symmetrical triangle, I think, is one that has already had a false break in each direction. As you can imagine, this causes problems for trading, and breakout trades can be tricky trades, and these breakout trades can be the very worst. But this one, I mean, I think given the state of play with the euro, personally I was assuming this one was going to break down, and it did. One thing you're missing, though, is if you don't have the RSI backup, you don't have the compression, or at least not much of it.
You can't really see it as well.
Compression, but I mean, but without strong compression, you may well not reach the target. This target is down here. That's also the head and shoulder target, but at the moment we're doubtful about reaching it. And I think we've probably got good reason to be doubtful about reaching it. I think the at the moment Stan's looking at 97. That's a much better match with what we're looking at on DX. If it breaks down and heads towards 80, well, we shall see. It might be a tally all disappearing at once or something.
Yep.
But at the moment, that seems a reasonable bet that we're going to get to 97 and reverse back up. Apart from anything else, we've got an appointment on DX, and this is, hang on, I'm just going to pull up the USB chart.
Yeah, very good. I'm going to do a micro example of that as well.
Yeah. Now we talked about the breakup from the triangle on USD, and this is the beautiful monthly RSI 5 triangle. It's gorgeous. I mean, that's really nice. I mean, there's a less good example on here, but this is, it's just peachy. It's I haven't actually drawn the triangle on this chart, but I've drawn it on this one, and this was the US dollar triangle. Now it broke up. Now, one thing we've been watching for. Now we've got targets in the 107 area. The 107 area, the reason I like that, I mean, we're doing, obviously this isn't the Fibonacci webinar, but if you look at this move here, this is actually a gargantuan falling wedge that took 30 years to form. Wow, maybe the largest I've ever actually seen. And this goes back, I didn't actually get the stock charts to go back far enough for this, but it actually goes back to the mid-70s. And it connects with a line, and I saw that, I made a note here that I saw it on a Bloomberg chart. And I drew the wedge on that. So this is actually a falling wedge, and it's broken up from the falling wedge. What is the minimum target on a breakup from a falling wedge? Unless you are just going back and retesting the low and coming back up. The minimum target is 38%. 38% is at 107.
Yep.
And that's why I really like the 107 target. If we actually fail here, and we could do, we have an acceptable double top here. In the event that we fall through 93 and just keep on going, then chances are this has topped. In that case, we would look for a retrace of the triangle, and Stan's probably going to talk about this on his trading example, but here you've got the breakup, you've got the retest, this is your level, 88. The bottom of the retest, that's right, isn't it, Stan?
Yep, absolutely.
Yep.
That would be the play.
So we'd expect the retrace back to 88. If we haven't made that 107 target, then the chances are we would be then continuing down because we'd be making a bottoming pattern to go back up and do a proper job and get to the 61.8. So that's not our primary scenario at the moment, but we'll see. It's this will need to reverse. I've got my lowest level of support at about 94. So if we get under 93, then actually this double top may be breaking down. All right, great. So these are various examples of triangles. The triangle thrust retrace, this would be annoying because we were expecting it to go higher, with good reason. But I think chances are it will go higher, and as and when this tops out, there will be a beautiful trade all the way back to 88. 95% probability. It doesn't happen every time, but it's almost every time.
Yep.
Great. I'll pass it back to you, Stan.
Okay, great. I want to show an example of how triangles are often fractals and how they repeat, and where to look for them in a structure, okay? What you're seeing right here is a chart of the US dollar, and I'm going back to this very strong impulse in the US dollar. I'm sure you guys all remember it. Do you remember when the dollar was like in the 80s? And the dollar was like not something to trade, because remember what this was like, how quiet this period was? Very quiet. Well, this was a triangle forming, as Jack showed you on the larger term chart. And people get bored with this. Like natural gas is another one. I was so bored with natural gas, and Jack and I were like, oh, we're in a triangle. Oh, it's going to break out. When it breaks out, we're going to get a 700 tick move. And by the way, I was wrong. We got over a 1200 tick move. Okay, so, and that makes another point. It's very hard to predict how far a triangle goes. So, you know, this is what you see in a triangle right before it breaks out. So there is a triangle in the dollar that leads to this very large breakout. Now, the point I want to make is when you have a very strong impulse, like look at this third wave impulse. Now I'm talking in Elliott terminology here a bit, but it doesn't matter. You don't have to be an Elliottician to be able to see a triangle, okay? You get a very, very strong impulse. What normally happens after a very strong impulse is a period of consolidation. Okay, look at this period of consolidation. This was 4 weeks of consolidation. Okay, easy to actually see. Okay, because you have the strong impulse and then you get this consolidation. Now, this typically happens in a fourth wave scenario. You'll see triangles forming after the third wave of an impulse, which, by the way, the third wave is often the strongest impulse. It'll be the high in RSI like it is right here. Okay, it's easy to spot. It's above the 75 level, often on RSI, almost always on RSI. So there's your big impulse, and now I start seeing price slow down, and it's a two-sided trade. What am I in? I'm in a triangle. It's really easy to spot, guys, okay? Usually it follows a huge impulse, and here we go going sideways, and we have compression on a shorter time frame chart. So here's your A wave, B, C, D, E. We called it right here, guys. We said break out of a triangle, and boom, and it went. Now, the way you measure a triangle for purposes of target, and by the way, this doesn't work, and I usually don't do this, but you know, you measure it like this. You take the end of the triangle down to where you would estimate the other trend line would intersect with it, like that, okay? And then you can take this distance here, and I'll do it with an arrow because this is easier for me to do. You take that distance and you basically duplicate it where the triangle breakout is. Now, that would basically, and I'm doing it by eye, guys, just to simulate it, that would really say the triangle target is here. Well, look what happened, okay? Triangles are very difficult to predict in terms of the depth. I think there's a minimum distance, but you cannot really accurately predict the distance of a triangle thrust. You just can't. Now, this is also a very good example of, and by the way, this is the setup in an Elliott triangle, sort of the big impulse, then you get a consolidation series in A, B, C, D, E, then the thrust, okay? The thrust is what you want to capture. I mean, day trading this will make you nuts, okay? So, you know, you wait for the triangle to mature, to set up, and then you could try something here with a stop below this low or below this low if you wanted to, okay? But the bottom line is this: when it goes, and this is the hard part about trading a triangle thrust, you have to let it play. You have to let it go. You have to let the trade go. You set your stop to even and you let it go until you get a break of at least the previous day. I want you to notice this triangle thrust. Where did it break the previous day's low? Take a good look. It doesn't break the previous day's low until here, all the way up here. Triangle thrusts tend to have a pattern where the previous day's low, and some people use 2 days previous low, okay? The previous low was not broken for, how long is this period here? That's like 2.5 weeks. That's a 2.5 week hold in the US dollar from 95.75 all the way up to 101 bucks. Okay, so that's a nice trade. Okay, now I want you to also notice what you do in a triangle thrust, especially one like this, trading it, and you get the, oh, we broke the previous day's low. Right there it is. Well, you get out of the trade, and what do? You get short. Why? Because this is what happens. You guys remember that? I remember that distinctly. Okay, I was actually long down here and I got part of this. What happens is the triangle itself is like a magnet. Okay, you get this back test. It happens probably 70% of the time. You get a back test. Okay, so the retrace of the triangle is a very profitable trade. Now, the reason I wanted to share this with you is to get a sense of, okay, where do I find a triangle? Well, first of all, it's in an impulse, but I want you to notice this is a third wave impulse, right? And here it is on a micro basis, if you will. Maybe not micro, but on a minute basis. Here's an example. But I also want you to notice on a bigger picture example, we have, here's your third wave impulse, right? The biggest wave on RSI, right there it is. What do we have here? We have compression. There's your A, there's your B. We're expecting a C down to 94, a D and an E, and then a thrust. We're predicting 103 to 104, but what did I just say about a triangle? Kind of hard to predict, guys, kind of hard to predict. We could go much higher, okay? So again, the hardest part of a triangle, I think, once you're in the trade is holding on to the trade, okay? So that's something to just notice. And by the way, what I want to say to you guys is if you have questions about specific instruments, now's the time for you to put it into the question tab. So we're going to get to questions here. Jack, is there anything else you want to show as an example of a triangle? So again, currencies are great triangle producers, by the way. The euro, beautiful triangle on the euro right now. Hold on, let me show you the daily euro. Yeah, so we have the opposite in the euro, the A, B, C. We're ready for a turn in the euro, the D, the E, and then a thrust. Okay, it's coming. We're not quite there yet. Anyway,
there are a couple.
Okay, yeah, sure. Let me throw it back to you, and then we'll take questions after you're finished, Jack. Yeah, but
right. Okay, now one thing, I'm just going to pull up that EEM chart there, because actually there was one thing I forgot to mention, and that is, hang on a second, right, quickly. All right, 1 million charts saved. Okay, that's an exaggeration. I have 4,500 charts saved at stock charts at the moment, although some of those I haven't looked at in quite a while, obviously. Now, let's just blow this up. I just want you to think about the implications of this EEM triangle a little more. Now, obviously, nice triangle, it's broken down, this is the thrust down. What's going to happen at the end? It's going to retrace. It's going to retrace to here. Would this be the target, or would this be the target stand? 38 or 36?
Hold on one moment, Jack. I was just looking at questions. Could you point again, please? I'm sorry.
I've got this and this as possible targets for the thrust. Sorry, for the retrace.
I would say there would be two targets. The first one, sometimes it is the first back test as the target. 35.86 would be the first target. The second one would be 38. Absolutely.
All right. So basically, this is going down. There's every chance that EEM is going to go down and get to 24 here. It may go lower, and then afterwards, it's going to go all the way back. And I want you to think about what that also means for the general markets. I mean, obviously, there's a lot of, practice. I'm getting emails, spam emails from EWI every day now talking about, oh, it's no accident, doom is coming, join us on the mountaintop. But the reality is actually... And
I have to say something. They were saying that in 2012. They were saying that in December of 2012, saying it's going to turn in January, and they were wrong then, and they have been wrong for years. Don't buy into their bullshit. I'm sorry. And by the way, I'm sorry, but these guys tick me off because they've been saying this for 3 years. Well, finally they got it right, Sorry, I didn't mean to interrupt you.
I know. Proctor, you wrote a brilliant book. He's obviously a brilliant man. But the problem is, I think he got caught up with the whole, it all goes back centuries, and the Elliott waves are, in fact, the thing which controls absolutely everything in the world years ago. And as a result, he just wrecked his objectivity as an analyst. I read something he'd said a few years ago. He said that he didn't trade personally because it might interfere with his objectivity. It might help his objectivity a lot. People who trade and actually lose money get objective really fast, or they run out of money.
That's right. Well said. Well said.
if you want to live in a fantasy world, do it on a virtual account, or just just tell people what to other people what to trade and never do it yourself. It's, anyway, enough about practice. But anyway, we're going down here. This can go to 24, go to 22, even go to 20. Who knows? But afterwards, it's coming back. And that's the long-term picture on any equities is that the bulls always win long term, always. You look back over 100 years, and every bear market, however severe, however radical, was just a retracement. Every single one. And you've got to keep it in perspective. This is a retracement too, and it's not going to be as exciting as some of those other ones. Anyone who thinks that 2008 is coming back, I think they've got another thing coming. We might have another 2008 in a few years. Certainly Fed policies seem to be inviting one, but it's not this one. This is just a Fibonacci retracement, and after it's done, the bulls are back in charge, and they will be for a while. Anyway, so I just wanted to talk about that because this is a very good pointer of what's likely to happen in the future, and it just confirms what is perfectly obvious to anyone, which is that after this decline, everything will bounce back. The only question is, how far does it go?
Yeah, right.
All right.
Exactly.
Great. I've got a little GDX one I wanted to talk about here
sure.
as well.
Sure, absolutely.
GDX has finally made its triangle retrace target, because here you got a nice little GDX target, nice little GDX triangle, and you've got you've got the equivalent triangle on our side here. It breaks down. The thrust doesn't get terribly far, but then it's only a small triangle. I mean, normally I would normally measure the target as being this way, this low. Now this would be A. I basically take the distance covered by B, and I would use that. It didn't quite make that target. Alternatively, I would use C. I would never use A, because you will often find, I mean, triangles often will go past it, but they often won't reach it. If you actually use your B or C as your measure, then you're much more likely to actually find that the triangle makes target. And here, of course, it's come back to here, but where is the triangle retrace target? It's at 18. Because it broke down here, this was the back test, that's the target, and it reached it today, or a couple of days ago. Very, very recently. So, and that was it making all the way back. And it was unfinished business when this went down again. And this, of course, is a double bottom. I'm wondering whether the precious metals complex is breaking up. We shall see. A lot depends on what happens here. And equally, a lot depends on whether it continues to be the flight to safety trade. Because if it does, well, SPX is likely going lower. So in which case, gold's going to bounce. All right, great. Shall I pass it back to you, sir?
Sure. I have a diagram, and I have a couple of questions here. I just teed up some questions, Jack, and let's try to answer them. And did you throw it back, by the way?
Yeah, I've got one more point to make about. I had another example I just wanted to show.
Sure, go ahead.
Where was it? Was it on RUT? SPX? Yeah, wait a second. I'm looking for that one. No, that's straight up triangle. So I've saved an example. I'm looking for it of a triangle on RSI where there is a wedge on. Because the thing is, of course, it's every falling or rising wedge is a triangle. They are directional triangles rather than non-directional triangles. I had an example earlier. Here it is. Right. Okay, now here you've got, on oil, you've got this falling wedge here, and here you've got a triangle, very clear triangle, on the RSI. What is this telling us? Well, I think it's telling us that the price is compressing down. I think it makes it far more likely that it's going to break up afterwards. It's doing, having said that, it's doing a false breakdown at the moment. We've got a slight breakdown there. Oil needs to actually pick up start rallying fairly soon. Otherwise, this triangle is going to break down. But I think it does show the, you quite often see the RSI triangle at the same time you see an ending diagonal. And I think it's one way of distinguishing an ending diagonal from just an ordinary continuation wedge. Because an ending diagonal will retrace entirely at the end of it. And it's a good way of identifying where you've got the end of the move. This is the end of the move, or at least we're very, very close to it.
Yep.
So, don't know whether it's going to be, we've got targets, 26 being hit, 25, I've got a trend line at 22, but we're close. And I think the, I think on CL we've got I've got a key trend line. I actually mentioned that the OPEC announcement wrecked my entry today, but I had an entry at 25.9, and that was on the basis of a falling channel on CL, a shorter term one, and that is one of the trend lines I'm looking at here. It didn't quite reach it today. Otherwise, my long order would have been filled. But this is a wedge. It's going to underthrow. It's already underthrowing slightly. Actually, you can't see it you can see it more easily on the shorter term one. And it's going to underthrow, and then it's going to break up. And that is the other thing to mention. Is this triangle going to retrace? It wasn't an Elliott wave triangle, was it, Stan? Was it an Elliott wave triangle?
Let me see. Trying to remember. That is not an Elliott. That is a classical triangle. That's the classical triangle we broke out of in oil. Yeah, right.
That's a damn shame. Because if it was if it was an Elliott wave triangle, we'd be heading straight back. But with a classical triangle, you cannot rely on that.
I do think we're going to head straight back. I think it may take some time for us to get there. For sure. 90 bucks ain't going to be seen in a while. Unless there's a war. If there's a war or something, that changes everything, of course. But anyway.
I could. And just in case there is a war, I would point out that there is an inverted head and shoulder neckline at 64, which could deliver the
there you go.
Yep.
All right, great.
So, you never know. Right, I'll pass it back, Stan.
Okay, I want to get to questions because we got some really good questions, Jack. There's a question here about how do you predict the direction of a thrust? Okay, now I want to just point out something. Remember the US dollar example that I mentioned, okay, a few minutes ago. Remember the third wave? And if you're at the end of a thrust and then you see the triangle, right? Remember I showed you the fifth wave usually follows, and it's a thrust out of a triangle, and typically the fourth wave is where you get it. So there's a general assumption you can make is that the direction of the trend, okay, if you're in an impulse, okay, if you get a triangle in after the third wave, after the major impulse, right? If you get a triangle, the direction of the break is usually to the upside in the direction of the trend. Okay, now David asked that question. It's a very good question, David. However, you have to look for exceptions to the rule. Okay, like for example, have we been in an uptrend like forever since 666 in the S&Ps? This is the S&P 500, right? So here we are at the end of the third wave, and what do we see? We see a triangle. Now, would you think that that would be an upward direction? This is the opposite example of the US dollar. Okay, remember the US dollar? We had a third wave, big impulse. Now, first of all, what I want to say is this is not a big impulse. This is an ending diagonal. So, you know, if you have a strong impulse that's like this, right, that typically then leads to a consolidation phase of A, B, and it compresses C, D. I'm sorry, guys, I'm going to draw this out because I'm trying to make a point. Then the E is typically shorter, 50 to 61.8. And then out of that compression in RSI, you get that, okay? Well, here's the same situation, okay? Now, I think that's probably true 70% of the time. At the end of a big impulse, you know, you get
that kind of triangle in classical terms is called a pennant.
Yes, right. And basically, when you see that, it's a continuation pattern, right? Now, the thing is, it's not always true. Now, first of all, I want to say this is not an impulse like this, right? This is an ending diagonal. So if you have any savvy and you see compression on RSI, that should give an indication to you that this triangle is going to break to the downside, which is what Jack and I were looking for, okay? So David, to answer your question, there isn't a rule per se in terms of which way it breaks. You have to look at the context in which the triangle happens in. If I'm in this context and I just finish a major impulse and I see this consolidation in the third wave position, I'm going to say 90% of the time it's breaking up. But here we don't have that, and we still have a triangle. It's still an indecision pattern, and that compression is going to lead to expansion. Now, the other thing that helps too is looking at RSI, and where are you in RSI, okay? Because if you're high up on RSI, typically the direction of the expansion is going to be downward, okay? The other thing that sometimes helps, but I wouldn't use this as a rule, is to look at the symmetry of a triangle, okay? So here you can see the symmetry of this triangle. It's basically a wedge, right, with a flat top. And so these triangles tend to break to the upside, okay? These descending wedges tend to break to the downside, okay? Sometimes they're just symmetrical. Most of the ones we've looked at today are symmetrical. And there is this rarity that you see, which is the expanding triangle. And these do exist, and very often, by the way, you see these as a megaphone pattern, but they're either rising or descending. Okay, and you get these huge moves at the end, okay? So, those are some patterns to look for, bull and bear, okay? They take both shapes. But I'm trying to answer the question as completely as possible. There isn't a general rule in trading, and when you start using generalized rules in trading, that's how you get hurt, in my opinion. So you have to look at the context in which the triangle is forming. It helps you decide which way it's going to break, okay? Okay.
There are also other things you can use. For instance, if you look at, hang on, throw me the chart back for a minute.
Yeah, sure, no problem. We'll do.
Context on a few of them.
There you go.
Right. Okay. Now let's have a look. Let's have a look at some of the triangles I've shown today. Let's have a look at the US dollar one. Okay. Let's have a look at the US dollar chart. Things repeat on charts regularly. Obviously, you've got a lot of the, commonality patterns. You've got your channels, you've got your wedges, you've got your megaphones. You've also got things like double bottoms. Which way was this triangle going to break? Well, look at this setup here, and look at this setup here. I posted this about 3 years ago, talking about how similar they were, and talking about the double bottom target, which actually, in this instance, is at 105, not reached yet. So, generally speaking, I would expect that to be reached unless a larger pattern was forming. Now that's a possibility here, because it's actually possible this whole thing is a double bottom forming from the 85 high. But that would suggest that the US dollar was going to be heading back to 165 to 70 in the next few years, which I'm finding a bit of a hard to swallow. Nonetheless, you never know. It could happen. If we break down here, we make a low and we come back up, that's going to make that a lot more likely, because that would get us back to there. And that would set the ball rolling. But here, which way is the triangle going to break? You look here, the similarities are very, very strong and they're obvious. Mm-hmm. This triangle was only ever really going to break up. If you have a look at the Euro one, these are basically different ones for different reasons. On the oil one, you have the RSI. False breakup. The breakups never happened on the RSI. These were false breaks. Price was just acting in a misleading manner, and to a certain extent, we were actually just making a double top and failing. So again, that's another clue that you can use. There are various clues you can use. This one here, the euro, really, it never even crossed my mind it would break up. Why? The fundamentals. They stink. It was only ever going to break down. I'd have been astounded if this had broken up. Also, the other thing was, of course, it was also forming a perfectly passable head and shoulders as it was doing it. What do head and shoulders do? They break down. So it never really seemed a particularly large possibility that euro was going to make a new high with all the troubles it had. Okay, so that's just a few examples. I'm just saying. You can use common sense, fundamentals. You can have a look at repeating patterns, see whether it's occurred before and what happened then. There are a lot of ways. Yeah, but they're complex. And
the only other way I want to mention too, just to add to that, is you look at the dynamics of the market as well. So if you're trading on multiple instruments and you see, oh, the dollar's in a triangle, well, the euro is probably in the triangle at the same time. Well, which one is the clearest pattern? And if you're trading in the dollar, but the euro is a clearer pattern, well, you go with the euro pattern and you trade the dollar off the euro pattern. So you can use the market as a dynamic to help determine breakout direction as well. But that requires more experience, I think.
And actually, I've got a brilliant example of that today, and I'll show you now. Hang on. I'm just going to pull out some day trading charts. Now, I use TLT as a proxy for trading.
Just a note, Jack. Please continue, but we have a lot of questions.
Okay, I'm just going to show you this one very quickly.
Okay, no problem.
In terms of using one market to predict another, this is a very good one today. What did we have here on TLT? We had a 5-minute sell signal, and I sold it. Yeah, but of course, ZB and ES are acting inversely to each other to a very large correlation at the moment. So what happened was when ZB started heading down because of the signal, ES went up. There was no buy signal on ES, but it wasn't a bad way to predict which way it was going. Again, you can use these. You have to be careful with correlations, but they can sometimes be very useful. I used a couple more TLT signals today because ES wasn't producing a lot of signals, but on bonds they were good.
Okay, very good. Let's get to the questions, Jack. Just a couple that I think we can probably.
I've thrown you back screen.
Yeah, I have it. Thank you. Why don't you highlight the difference between Elliott wave and classical triangles? And I'll add my view to that as well. And I have a couple of other questions here. I'm going to line up a chart or two to try to answer them.
I think the key thing is it's the RSI. Now, you probably won't find a mention of the RSI, and I don't know whether Prachter mentions this in his book. And whatever I've said about Prachter, he wrote an excellent book. Yeah, he wrote an excellent book. He really, really did. That was the peak. That was his peak, and he's really come off since then. But he wrote an excellent book, and I wouldn't want anyone not to read that book because he's not much of an analyst. And that is an excellent book. There are lots of very good Elliott wavers, and they all read his book. So if you want a good grounding in it, that's a good place to start. In terms of what makes a difference, for me, it's the RSI. If you have an RSI triangle, tend to be very good triangles. If you've got a clear RSI triangle, then the chances are what you're looking at on price is a triangle.
Yeah, and to be honest, the whole compression of RSI thing, I haven't seen anybody write about that. That's something.
I haven't seen anyone write about it either, but
that's something that Jack and I have been working on for some time, and there may be other practitioners out there that use it. I haven't seen anybody write about it. So anyway.
But once you know about it, it's very obvious.
Oh, it's so obvious. It's so helpful.
As soon as you're looking for the for triangle setups on RSI, it's very easy to see them. And then if you've got that RSI triangle, generally speaking, you'll find a price triangle, or you will find an ending diagonal, one or the other. And those should be Elliott wave patterns, and practically always will be.
Yep. Okay. I'm sorry, the difference between the two, I think, as Jack mentioned, the one very simple thing, if you got the compression on RSI, it's likely an Elliott triangle. How do you know where to start the A wave? Okay, Len asked that question, and that is a very difficult question sometimes, Len. Okay, so here is an example of TLT. As you probably remember, we had before July of 2015, we had a very strong downdraft, right? So if you think about it, here we are, we have this very strong downdraft into July of 2015, and we have a sideways formation here, right? So what would be your first impression? Your first impression is this would be your A wave. You would say A, B, C, D, E, and you would say, here we go, breakout's coming, okay? And by the way, that was my call. I said, it's coming. Here it is. This is E, 124.03. And actually, that wasn't the call. We said this could go either way. It wasn't clear, okay? And we went down and we said, if we break 124.03, we're breaking up. We break the lower one, we're going down. And we said, this is not tradable. That's what we said, okay? But originally, I had it the other way around, to be honest. So this is what I call a B wave triangle, okay? So I use W, X, Y, Z, guys. So this is your A wave and this is your B wave, and this is your C wave. Okay, so here it's a B wave triangle. So A, B, C, D, E, and so this is nothing but a consolidation pattern before we rip to new highs. And we may or may not get to new highs. It might be a double top or whatever. But you can see here when we broke 124, we said we're going to 133s, 131 to 133s. We're there. I mean, we're at the upper trend line. Very nice bear channel, which it may not be a bear flag per se. We get a back test, we could go much, much higher. So Len, I think, again, the answer where to start the A wave, it is a function of looking at the RSI, looking at the context that you're in, having a theory and knowing where you're wrong. Okay, like for example, this 3 down stopped right at the 100% fib. It stops right there. I'm going to say, okay, we got a problem. Okay, Houston, we have a problem. We're not breaking the lower trend line. And you have to start looking both ways, and you have to have your levels and wait for the breakout and then make your trade. Okay. Okay, so we got those. Any tips for predicting the direction of the thrust, Fred? I think we covered that. What percentage of the time, Jack, do you think triangles have 5 touches of support and resistance lines, A, B, C, D, E, before thrusting? Any tips about how do I identify its thrust, which I think we've talked about that already, but any sense of that from your perspective?
For me, with an earlier wave triangle, to be honest, working out which way it's going to break out, the breakout is the most difficult time. It can be very difficult. The TLT one was a very tough one to call, and that one was easier because actually it also read as a descending triangle. Because of those 2 lows there, so it was easier to pick up the A wave from there. One thing you can look at is when the triangle is very mature. If you have a breakout of the triangle before it has reached the other side, then you're probably looking at an E wave, because an E wave is the shortest triangle and frequently won't get to the other side.
Yes, very true.
If you can get a breakout there, that allows you to nail down the count a lot better.
And the thing that gives it away. I'm sorry, Jack, please continue.
Yeah, sorry. If you're looking at a pure classical triangle, personally, my recommend would be don't trade them, because Elliott wave triangles are very, very solid to trade, and they do the retrace after the thrust, which is great, because which just makes them awesome to trade. I think the classical ones, if you can't rely on that, then actually half of, more than half of the trading use of the triangle disappears at that point. And they're very difficult to call the direction on, unless from the overall context, it's easy to work out which way it's going to go.
Okay. What are your thoughts? And in terms of the ABCDE, you're going to see that, Fred, most of the time in a compression of RSI. What are your thoughts on gold versus euro triangles? Gold clearly is broken up and is ripped, but the euro is still trapped. Does that help decide direction? And I would say no, it doesn't. I think that you have to look at the dollar, which is in a triangle, and you have to look at something that it correlates well with, like the euro. Okay, so I think that the euro, as we showed just a moment ago, it still needs its D wave and an E wave, and then the euro should thrust lower. Okay, it should continue in the direction of the trend. That's our current stance on that at this point. And I think gold
that seems very likely.
Yeah, I agree. And gold, in terms of where it is, we're still in a pattern in gold, guys. It's just exaggerated because of the flight to safety. I mean, that's what's happening with gold from my perspective. Is the thrust usually in the direction of the trend? I think we've already answered that one once. The triangle in gold today looks like a breakout up. And was there a triangle in gold today, Jack?
I don't notice a triangle in gold today.
I didn't notice a triangle in gold today either. The gold chart, and I'll just show the gold chart real quick.
I'm having a quick look at GC.
Yeah, I'm going to pull mine up too. I didn't see a triangle today. But the question is, can you talk about what to look for failed breakouts? There's no triangle here in gold on my stuff. I don't see it. There's no compression on RSI. You can see in my 4-hour chart here, I don't have a triangle on my 4-hour chart. Now, I don't
have an Elliott wave triangle. I've got a possible classical descending triangle for me.
There's a beautiful example of a weekly triangle in gold. I mean, and a lot of people won't consider this a triangle because RSI did compress here, which I'm not going to show you that right now. I'm not going to remark up the whole chart, but you can see here the A, B, C, D, E, and then the 3-wave move down, which we're now back testing the entire B wave. Okay, we're getting dangerously high here. So in other words, we finished the A wave down in gold. And I wonder if I can get this all on one chart. There you go. Okay, on the daily, we finished the A wave down and we're back testing the B wave. Now the B wave is going very deep, okay, and this is a flat. This is a flat, which is a reversal pattern. Until we break 81s, we're going to get a very severe back test. This is going to unwind at some point. This is a flight to safety, so we'll see how that plays. But I don't see a triangle there in anything that I have, Jack.
I've got on the 15-minute chart. I've got a very small possible descending triangle forming.
You want to show it real quick?
Just from the, I can't. It's on my futures chart. I'd have to transfer it over.
No, sorry about that. I just threw it back to you. Let's just get to, I think that was the last question. Let me just check.
I've got something to add, actually.
Okay, please do.
Right, hang on. Just throwing the screen back to you.
Okay.
One thing I wanted to mention that I'd forgotten to was triangles tend to have a time frame. Yeah. If you're looking for RSI triangles, you have to find the right time frame to see it.
Yeah, that's a good point. Very good point.
A lot of the time. So the thing is, if you're looking at something on, let's say, the 5-minute chart, and you're not seeing any compression on it, it may well be that you should really be looking at that triangle on an hourly chart or a 15-minute chart.
Right.
So they have their own time frames.
Mm-hmm.
When I was showing you that beautiful weekly triangle on SPX, that wasn't at all clear on the daily, and that's because it's weekly or monthly that it will show up on. Equally, use both the RSI 5 and the RSI 14. Because you will find that it may well be clearer on one than the other. So if you are looking for an RSI triangle and not finding it when you're expecting to find one, look harder. You may well find it on another time frame.
Yeah, that's a good point. Very good point. And I think that the secret with triangles is you'll notice a two-sided trade and you'll notice the price is slowing down. The volatility is contracting. It's a dead giveaway. Usually by the B wave, you see it, or at the very worst at the C wave. And anyway, so I think Jack, that's it for questions. Let me just double check.
Yeah, I think it is.
Hold on. Big picture, multi-month.
Actually,
yes,
one thing that always has me looking for a triangle is if someone mentions how boring the market is at the moment. I'm always instantly for a triangle.
Yeah, right. Okay. There was another screen full of questions here. I'm just going through them, Jack. When you look at triangles, what time scale do you use? Okay, I think you just covered that.
Just covered that.
Okay, and I think you just read Steve's mind, by the way. So, guys, I think that's it. That's a wrap for today. Jack, great job as always. Thank you very much, and a pleasure doing this with you.
Yeah, pleasure as always, mate.
Yeah, all right. Take care, Jack. Bye-bye.
Cheers.